Chinese imports plunged and export growth slowed in April as the recovery waned, raising concerns about the country's ability to boost the global economy. Overseas shipments expanded 8.5% from a year earlier to $295 billion, the Customs Administration said Tuesday in Beijing, slowing from the double-digit gain in March. Imports, though, dropping 7.9% to $205 billion, much worse than the median projection of a 0.2% decline. That left a trade surplus of $90 billion for the month. The unexpected import plunge spells trouble for economies that had been expecting China's emergence from COVID-0 to fuel their own export growth. The recovery so far has mainly been driven by consumer spending rather than infrastructure and property investment. That's reduced demand for commodities such as crude oil, iron ore, and copper, imports of which dropped in April from the prior month. Neighboring countries such as Japan and South Korea are disappointed as they had expected positive effects from China's reopening on their economy, said Ding Xuan, chief economist for Greater China and North Asia Standard Chartered Bank. Exports were aided by a favorable comparison with this time last year when Shanghai was in lockdown. Economists caution that rising prices and interest rates in the rest of the world, high inventory levels, and the war in Ukraine will serve as brakes on global consumer demand, meaning any increase won't last forever. China's strong exports can't last if the U.S. is weakening, and Europe's economy is kind of flat, said Iris Pang, chief economist for Greater China at ING Group NV in Hong Kong. The drop-off in imports also suggests there is more reason for worry about the sustainability of China's rebound. The imports were quite disappointing and would add concerns to China's demand recovery story, said Xiao Jiazi, chief China economist at Crown Agriculture in Hong Kong. She suggested that the price drops in import items, including energy products, may be dragging on the headline figure. Tech imports contracted due to the global slowdown in electronic demand and the relocation of supply chains. And don't be fooled by headline export figures from China that show shipments growing in April compared with last year, when the figures were depressed by pandemic lockdowns. The real picture is much weaker. David Q, economist, read the full report here. The trade data has also stirred speculation about whether authorities will take more supportive actions to help the economy. Analysts from Guotai Junan Hong Kong Limited see a policy rate cut in this quarter as increasingly likely. Pan of ING also sees possible government support in the future, given how much the deteriorating global economy will impact China's manufacturing sector. She floated potential options, including support for the industry's labor market through electric vehicle subsidies, increasing the speed of infrastructure project deliveries or other means. Other highlights of the trade data included open in 45 Southeast Asian nations were China's biggest trading partner in the first 4 months of this year. Trade with ASEAN countries reached $305 billion, up 5.6% from a year ago, and provided both following in 44 probably done markered was level distances with a move. Trade with shit 1550 Prist undershooting across the 15.6 Sun, $1 billion, a 5.6% from a year ago, and accounting for the 15.7%. Trade between the U.S. and China was worth $218 billion, down 11.2%, while trade with the EU declined 3.5% year-on-year to $263 billion. Automobiles led the jump in China's overseas shipments in the first 4 months of the year, with the value more than doubling from a year ago. They were followed by the 41% rise in refined oil and a 33% increase in steel products. They were followed by a 41% rise in refined oil and a 33%